Have you ever felt like taxes are just one big, confusing mess designed to make you pay more than you should? What if I told you that the average American misses out on hundreds, even thousands, of dollars in tax savings every single year, just because they don't know what deductions they qualify for? Today, I'm going to show you the tax deductions every beginner must know. And trust me, by the end of this video, you'll look at your taxes in a whole new way. There's even one deduction so overlooked it feels like a little-known secret, and you'll want to stick around for that. Number 1. The standard deduction. Let's start simple. The standard deduction is probably the most common deduction and also the most misunderstood. In 2025, the standard deduction for a single filer is $14,600. If you're married filing jointly, it's double that, $29,200. Here's what that means. If you earn $50,000 this year and you take the standard deduction, you only pay taxes on $35,400. For beginners, taking the standard deduction is often the easiest choice. You don't have to keep receipts or prove anything to the IRS. Just take it and move on. A lot of people wonder, should I itemize instead? For most beginners, unless you have a mortgage or massive medical bills, the standard deduction is usually higher than what you'd save by itemizing. Number 2. Home office deduction. If you work from home, yes, even as an employee in some cases, you may qualify for the home office deduction. But here's the catch. The space you deduct must be used regularly and exclusively for work. That means no doubling as a guest bedroom or family TV room. You can deduct a portion of your rent or mortgage, utilities, and even repairs. For example, if your home office takes up 10% of your house, you can deduct 10% of your rent and electricity bill. Even freelancers who use a corner of their apartment for work can save hundreds of dollars this way. Number 3. Student loan interest deduction. Still paying off student loans? Good news. You can deduct up to $2,500 of the interest you paid on your student loans, even if you don't itemize. One of my clients was shocked to learn that her monthly payments, which felt like a burden, actually reduced her taxable income by $2,500. Keep in mind, though, there are income limits. If you earn too much, this deduction phases out. Number 4. Medical and dental expenses. This one is a little trickier, but it can be huge if you've had a tough year health-wise. You can deduct medical and dental expenses that exceed 7.5% of your adjusted gross income. For example, if your income is $40,000, anything above $3,000 in medical bills can be deducted. One family I worked with had a child who needed a lot of therapy and special care. Their medical bills added up to over $10,000, and they were able to deduct most of it. Number 5. Charitable donations. Donating to charity not only feels good, it also lowers your tax bill. You can deduct donations to qualified organizations, whether it's cash, clothes, or even your old car. Here's a tip. Always get a receipt. Even for non-cash donations, you'll need to show proof if the IRS asks. One woman I helped cleaned out her closets and donated everything to Goodwill. We calculated that her donation was worth over $600, and she got a deduction for it. Number 6. Retirement contributions. Here's where you save for your future and cut your tax bill today. Contributions to a traditional IRA are deductible up to certain limits. In 2025, you can contribute up to $7,000 if you're under 50 and $8,500 if you're over 50. A young man I worked with opened his first IRA and put in $5,000. That instantly reduced his taxable income by $5,000. Number 7. Educator expenses. Are you a teacher or even a school aide? Educators can deduct up to $300 for classroom supplies they paid for out of pocket. And if both spouses are educators and file jointly, you can each claim $300. One teacher I know kept all her receipts for crayons, posters, and markers. At tax time, she was able to deduct every penny. Number 8. State and local taxes. This one is often called SALT, the state and local tax deduction. You can deduct up to $10,000 of property taxes and either income or sales tax you paid to your state or local government. For example, if you paid $5,000 in property taxes and $4,000 in state income tax, that's $9,000 you can deduct. Be aware there's a cap. Anything beyond $10,000 is not deductible. Number 9. Job hunting costs. If you were looking for a job in your current field, Some of your expenses might qualify as deductions. Things like printing resumes, traveling to interviews, and even hiring a career coach. I once helped a client who spent over $1,500 job hunting. Those expenses brought his taxable income down and saved him a few $100s. Number 10, mileage and travel for work. If you use your car for work, not commuting, but for actual business trips, you can deduct those miles. For 2025, the rate is 65 cents per mile. For example, if you drove 1,000 miles for work, you can deduct $650. Keep a log of your miles. There are apps that make this easy, so you don't forget. Number 11, child and dependent care credit. Not technically a deduction, but it's just as good, if not better. If you pay for daycare, after-school care, or even a babysitter while you work, you may qualify for this credit. You can get up to 35% of what you spend on care, up to certain limits. One single dad I worked with paid $6,000 for daycare. He ended up with a credit worth over $1,000. Number 12, health savings account contributions. If you have a high-deductible health plan, you can open an HSA and contribute pre-tax dollars. For 2025, you can contribute up to $4,150 for an individual or $8,300 for a family. Those contributions reduce your taxable income, and the money grows tax-free. One couple I advised maxed out their HSA for the year and reduced their taxable income by $8,300. Plus, they can use that money for medical expenses anytime. Number 13, the little-known Savers Credit. And here's the one I promised at the start, the little-known Savers Credit. If you're a low to moderate income earner and contribute to a retirement account, you might qualify for this bonus credit. It can be worth up to $1,000 if you're single or $2,000 if you're married filing jointly. One young woman I helped made under $30,000 and contributed $2,000 to her IRA. She got a $1,000 credit, money that directly reduced her taxes owed. So many people miss this because they don't even know it exists. Number 14, moving expenses for military members. If you're an active duty member of the military and you move because of a permanent change of station, you can deduct unreimbursed moving costs. This includes things like transportation, storage, and lodging during the move. One soldier I spoke with deducted over $2,000 in moving expenses after relocating across the country. Even though moving expenses are no longer deductible for most people, this special exception still applies to military personnel. Number 15, casualty and theft losses. If your home or belongings were damaged in a federally declared disaster, you might qualify to deduct some of those losses. For example, a family hit by a hurricane was able to deduct thousands of dollars in damages not covered by insurance. Be sure to keep all documentation of the loss, insurance claims, and any out-of-pocket cost you paid. Number 16, adoption credit. Adopting a child is a big, heartwarming step, and the IRS actually helps with the cost. You can claim a credit of up to $15,000 for qualified adoption expenses. That includes adoption fees, court costs, attorney fees, and travel expenses related to the adoption. One couple I worked with adopted a baby girl and was able to offset nearly all of their legal fees thanks to this credit. Number 17, earned income tax credit. This is one of the most powerful credits for low and moderate income workers. The earned income tax credit can reduce your tax bill by as much as $7,300, depending on your income and number of children. Even if you have no kids, you can still qualify for a smaller amount. One young man earning under $20,000 got over $1,500 back just from this credit. Number 18, business expenses for side hustlers. If you have a side hustle, like driving for rideshare apps, freelancing, or selling online, you can deduct ordinary and necessary business expenses. This includes things like your laptop, supplies, advertising, and even a portion of your cell phone bill if you use it for business. One woman running a handmade jewelry business deducted over $1,200 in expenses her first year, cutting her tax bill in half. Number 19, energy-efficient home improvements. Did you make your home greener this year? The IRS offers credits for installing things like solar panels, energy-efficient windows, doors, and HVAC systems. One homeowner I met claimed a credit of nearly $4,000 after installing solar panels on his roof. These credits can save you a lot while also helping the planet. Number 20, Alimony paid for older divorces. If you're paying alimony based on a divorce finalized before 2019, you can still deduct those payments on your tax return. One divorced father I worked with was paying $800 a month in alimony and deducted nearly $10,000 over the year. But remember, if your divorce was finalized in 2019 or later, this deduction no longer applies. Number 21. Jury duty, pay given to your employer. If you served on a jury and gave the jury pay to your employer because they continued paying your salary, you can deduct that amount. One man gave his employer $300 in jury duty pay and deducted it to avoid being taxed on it. Number 22. Depreciation on rental property. If you own a rental property, you can deduct depreciation each year, even if the property value goes up. One landlord I know deducted over $8,000 a year in depreciation on a single rental home. This deduction helps offset rental income and lowers your overall tax burden. Taxes are full of hidden gems if you know where to look. Learning about these deductions could mean the difference between paying more than you have to or keeping that money in your own pocket. So which of these deductions or credits were you most surprised to learn about? Or do you know another little-known tax tip you'd like to share? Drop it in the comments. I'd love to hear what you think.